Okay. Yeah, and you guys can record this too. I mean, I make a recording and I don't think I'm going to publish this one.
Okay.
There, Moko. All right. So thanks for joining this evening. It's Thursday, May 29th. You see me squinting a little bit because I'm trying not to use my $1 glasses from the dollar store.
I I hear you, man.
My mother always told me that I would be wearing them, and because I made fun of her because she had like 6 or 8 pairs laying around all the time, and I was like, no, I can't do that. And sure enough, I am because I don't want to get lenses yet until maybe 5 years from now, right? Anyways, so
We
thanks for
all
joining.
fight it. We all fight it eventually.
I know I go through kicking and screaming sometimes. It's like when these kids tell me I have to scan a QR code, I act like I don't know what they're talking about. Although I can tell them how it was programmed and where it came from and the origins of the technology, I act like I don't know what that is. So I don't know
So
what
I've
you
read
guys
some
do.
interesting information on peptides about eyesight that I might give
Okay,
it a
well,
shot.
I'm sure we can talk about that later.
Yeah, we'll talk about
Okay,
it later.
so I just wanted to cover some basics that I have a conversation on many occasion, and then it almost seems like the discussion, the subject of filing tax returns, mm, people don't want to talk about it too much, and then some people that do want to talk about it, maybe they're afraid to, but some people that do want to talk about it, they want to talk about what I call the tax protesters, what they're doing regarding tax returns. So I want to cover that, but regarding communication with me, so you can set up a consultation at aceofcoins.com. And I know I have an archaic way of doing this, but I think it's more secure if you're downloading a PDF file, you're going to edit it on your computer and then email it to my assistant. That seems to work. I mean, certainly my video subscriptions are through a merchant processor, so you can use a credit card on those. But what you're getting for the consultation is that you're not getting an LLC. I do set up the LLC. If you want me to do it for you, I'll just charge the state fee and then I set it up. But you're paying for consulting. So I'm not really selling LLCs. If that's all you want, you can just go get one yourself, or
Yeah,
yeah, you can pay someone
yeah,
$100 to go do that. So
yeah. I already did a one consulting with you. I know you probably do a lot of people. I'm
okay,
Jay.
and here's what you get on the consulting. A lot of see, I'm very eager to do something. All right. When I hear your situation, if I can, get involved, if I can help your situation, I would rather write up a document for you. So part of the consultation is I'm going to talk to you for 45 minutes. Sometimes it's an hour. But I will also be happy to schedule a follow-up call or two without charging you. So I always give you a coupon code on the second, third call, right? So it doesn't cost you anything. And in addition to that, I'll usually create something if you need it, look at something, I'll review something, give you my opinion on it. So, and also I may even share with you some of the strategies I use. So I try to give you everything on the call. I even
Yeah, the call was great. The call went great. It just that problem was that 1290 was. I thought it was a subscription or something.
Okay. So there's that aspect to communicate with me. And then of course I have my video subscription where I try to, get into all the details on what people experience. I mean, I've worked with tens of thousands of people in 32 years, and I take all that knowledge, that strategies, all those things, and I try to make give you the punchline right in the videos, and then back up and then maybe give you an
Okay.
example document and things like this. I'm about to do something new. Now, I ordered this NVIDIA AI device, still not here. They're on back order. So what I'm wanting to do is I'm gonna do some videos. It's gonna be only in my subscriptions. Now, I will let you know as I do this. They're not there yet, but I'm gonna add to my content. You guys are a lot, many of you are already subscribed, so you're just gonna get this. Um, I'm gonna show you how I use the AI to create documents and to do a little bit of research, but there you have to know what you're talking about to get the results that are going to be effective, right?
Yeah.
So I'm going to show you how to know what you're talking about. If you don't know what you're talking about, I'm going to show you, okay, on the different subjects that I'm dealing with. Okay, I'm dealing with like things that are in court, right? Maybe I'm dealing with an administrative process that's not in court. Maybe I'm dealing with a legal instrument. Maybe I'm dealing with family planning or a trust or something like that, right? I want my trust to be written in a certain way, and I can show you how to use the AI to guide you and actually create a document that's pretty solid. So, anyways, that's coming. I'll let you know more about that. Tonight, I want to talk about very simple, I say very simple, the concept of, hey, how is it legal? How is it even legal? Like, why people ask me, why are you not in jail, John? You know, um, for not filing tax returns, and I'm not saying, so I'll just warn everybody. I don't do disclaimers. I'm just going to tell you how things are. And if you can, agree with me, fine. If you can't, that's, you can do some research. I had someone ask me the other day, about what I thought of a list of other, let's call them tax protesters. And they had all these theories and these protest letters. And I could just tell you that I've heard, I think, everything that you can have that originated from the 80s. And I didn't start doing this work until the 90s. And the part of the reason why I did it is because I saw that there was a need and that it was not being filled by people, professionals in this area that I could probably do. And so over the years, it just became, you know, a larger niche market. I have like a dozen niche markets that I work with. So these people have these theories, and I just want to, before I even talk about that, I'm going to talk about the idea of the 1040 and why is it possible to not file a 1040 and still not break the law? So here's a very simple thing to consider. You have to think about it like this. On the 1040, it's a document requesting financial information from the executive branch of our government. This is another word for the police. No problem. Just understand who you're dealing with and what the nature of it, the communication is, right? So the assumption is I have to file a tax return every year, okay? In doing so, I'm testifying. No problem. I can do that if I want. But don't we have laws that preclude the obligation to testify when you're under criminal investigation, right? If you're a suspect in a crime, so right? So this is the exception. So be careful about that, because just because, you know, the Fifth Amendment and just because it's penalty of perjury, that doesn't really come in as a defense, but just understand that you cannot be compelled to testify. Just like you cannot be compelled to sell your car unless you do a thing. For example, if you filed bankruptcy, the trustee could sell your car. Why? Because the condition of filing bankruptcy to get protection from the United States may involve the sale of your car, and you have to agree to that. But only then could your car be sold, and that would not be against your will because you have to agree to those things. But no one could just come along and say, hey, you should sell your car to me or sell your car now, you know. So the fact that you are being expected to testify, and it's very important. So for example, if I testify on a 1040 and the government finds that down the road, finds that I lied, maybe I didn't intend to lie, but let's say the government finds that maybe that what I gave was a false statement and I refuse to amend my testimony, which you always have a chance to amend your testimony. Or if it looks like I'm deliberately deceiving the government to evade taxes, well, then there may be a penalty of 5 years imprisonment and huge fines, right? So there's a very severe penalty for doing this. So you cannot be compelled to testify under those conditions, but we do. And once you do, that testimony can be used, can be relied upon at face value. And this is also why I explained when you're being audited and the government wants to say you did something wrong or you owe more money or something of that nature, just understand that you testified and no one in the government did. And you're the only person on the planet that can testify really about your money and the manner in which you use it. Your employer can say how much money you got. Your employer can give up a copy of your W-4, right? But only you can really testify about your money, right? So it's very important there. So let me just tell you how the system works. This is a summary of it. The reason why it works like it does is because the Department of Justice can indict somebody for willful failure to file a tax return, and it can convince a jury of people that file 1040s that you should have filed and didn't. You see how easy that is? Does that mean there's a law that requires you to file? No, it's just what I just said. It just means that the government can convince a jury of so-called your peers, right, to convict you of doing a thing that they're already doing, that they think is cool, that they think is acceptable. That if you're not doing it, how dare you not do it? I'm doing it, right? So that's how it goes. But people have won. People have been acquitted. I'm not saying you want to go down that path. And a person who doesn't file a tax return, like I've filed, I think 9 in my whole life. I filed 9 consecutive tax returns before I realized I shouldn't be doing that. And I stopped. That was like 32 years ago, a long time ago. And so I have to be careful about, I'm not deceiving the government, but I have to be careful about not creating, now this is the important thing. I don't want to create a duty for the United States to account for money I receive, to reconcile, to balance the books. Now, I know I'm probably speaking out of school for some of you accounting people, but it's a duty to reconcile. So here's how that looks. If I filed a tax return for the first time, the government creates an accounting ledger. Maybe I'm using the wrong term here, but it's an account. saying, okay, we have a taxpayer who filed a financial statement under penalty of perjury. Using penalty of perjury is an accounting function, just so you know. This is done for big corporations, okay? This is how you get the ability to sell stock, okay? Someone has to testify, okay? It's the accounting firm. But anyways, we're doing that individually for ourselves. So once we create the ledger, it's created for us. You filed a 1040, and let's say you reported income that was you just did some work for people over the year, and you got $30,000 in cash, right? And there's no record of it. You just reported it truthfully. You just said, yeah, I got $30,000. So the government says, okay, we accept that. And here's we collect your tax on that, and we'll wait for the next year. Now, because you created this record, the government's going to expect, now it's not like the government's Uncle Sam. It's just like, I'm just speaking figuratively. The government's going to expect another 1040. Now, if you don't file a 1040 under that same condition, probably the government won't look. It won't send you a letter of any kind, because there's no, in that situation, there's no 1099, there's no K1, there's no W2. But because there's already an accounting ledger, let's say a set of books that has already been reconciled and closed for the previous year, if the following year, let's say you get a W2, maybe you got a job and now there's a W2, that W2, a copy goes to the IRS. And so the IRS will wait for you to testify about that income, right? It has to reconcile these two reports. If you don't file your report and it only has a W2, the government has a duty to reconcile, find out what the heck happened. What happened? Did the guy die? Why didn't he testify about the W2? You need to file the W2 so the government can say, okay, it matches, and therefore, and they do their job, right? The people at the IRS or the software or machine, whatever machine is doing this work, okay? So that's how it works. So how does a person who's filed tax returns before get out of the situation of where the government's expecting tax returns? And it's not a deceitful thing to do. It's just simply telling the truth. Here's how it works. You cannot have wages and discontinue filing a tax return without problems with the IRS. Problems meaning that the IRS is going to take the W2 in the absence of a 1040, it's going to make a fake one. And there's a lot of detail here, so I'm giving you the summary. It's going to make a fake one, and this is called a substitute for return. I believe it's under what, 6320, Ray, what is that?
6020B.
6020B, thank you.
Yeah,
So under
California.
6020B, you guys can look this up, 26 USC 6020B. Look at the reg though. Look at the implementing regulation, it's more detail. It'll create a fake return. The reason why it does that is so that the software can function, that is, begin sending you letters asking you why you haven't filed a tax return. So it's an automated system. It's an automated collection system, but there's 3 stages in that process. So if you don't file a tax return to account for a W2, once your ledger's been created for the first time, the government will then create a fake return and just give you standard deductions, which is usually higher than you would get being able to claim deductions. Usually it prompts people to then file a tax return, because the government's version of your tax return is going to not give you credit for deductible things. And so you're going to see that and probably be afraid, right? You're going to say, whoa, wait a minute, I don't owe that much. I have deductions. And then you file a return and the government says, okay, well, we'll take your return instead. Excuse me. So that's how the system works. And so if you want to get out of that cycle, you have to live your life in a way that you're managing money and disposing of property, running a business in a way that doesn't create a duty to reconcile for the government. So that means you're not going to get a 1099 in your name with your SSN or a W2 or a K1 or these things. So you have to be very careful about how you're doing this. So that's why I explain to people about using a limited liability company. Now, I'm not saying this is some gimmick that is going to allow you to cheat. It's not what I'm talking about. What you're doing is you're changing the way you're using property so that you don't create a tax liability. The tax liability comes from the government's duty to reconcile. Okay, now we can get into the details about whether or not the income is taxable. You know, we'll talk a little bit about that. So I'm going to stop with that example right there. You get the basic idea, and you can ask me questions if you want, if I need to explain a little bit more, but that's generally, if you want to stop filing and not have adverse consequences, you can do that legally. You just have to avoid creating a situation that gives the government a reason to do something.
So are you saying, John, that you can't have a job that submits a W-2?
Right. If you get a W-2 and you don't file a 1040, the government will eventually take all of your wage income. It'll take about 3 years. Sometimes it takes longer. It'll just take all your money. If you file a W-4 with like 9 dependents, that's an old trick. You'll get to keep most of your money, most of your money until the government catches up with you, and then it'll tell your employer, no, it'll tell your employer, oh, you can only have 1 dependent and start doing this, and you're going to be subject to all kinds of penalties, right? They're going to do an assessment, they're going to send you a bill and all these things. Right? Does that answer your question?
Well, I was just curious, you used the term the government files a fake return. And so I'm wondering if that meant that
Okay,
only you had said before, only you can testify about how you use your
that's
money.
correct. That's why I say it's fake, because the government cannot file a return for you, but it does so, it creates a record that allows its computer system to function. This is how the actual software was created back in the 40s. And it wasn't software back then. It was just a system, right? It was a record keeping accounting system. And so I don't know when that was amended, because the tax code was amended in it was like 86 was a big amendment. And then
39
in
before
39.
that.
Yeah. Karen, what did you want to ask?
So my son is 18 and he has not filed a tax return, doesn't plan to. He buys into what I've told him about your strategy. He worked at a tire center and I helped him do the W-4, and I did some research and I wrote exempt on the W-4.
Yeah, don't do that.
He never filed the 1040, so that's not a problem, right?
No,
He-
that'll cause the IRS to look at it, and the IRS
It will?
Yeah, the IRS will instruct the employer, because the W-2 is being reported now. I could be wrong on that one. I'm not sure, but either way, either he's going to continue with that and no problem, or the IRS will instruct the employer to withhold one deduction or something like that. But as long as he never files a tax return, he's never going to have a problem. He's just going to be out that money that's being withheld.
Right. But
And
you're saying that you really don't want to do the 9 dependents
I
or
wouldn't do that.
exempt.
Even if you're not filing. I tell my children, just don't file. Don't ever file. And so if you never file a tax return in the United States as a US citizen, the IRS will never look at you. It doesn't matter if you make $1 million in interest from a corporate investment. Personally, you're never going to have a problem. The biggest 1099 ever, never have a problem with the IRS.
Okay.
You
But
don't
just,
create a
just
duty.
so I understand again what you're saying. Yes, I get never file. I've told my kids never to
Yeah.
file, but also if they get another wage job and they have to fill out the W-4, to just do it with some basic exemptions and they're just out
Yeah,
the
do
money.
standard deductions on the
Okay.
W-4. Yeah, just make it standard and suffer the loss of there, and just understand that's what I'm going to do, because I think in the long run you're far better off, because you're going to, in being an employee when you're young, it's a good idea, because you're going to learn things, you're going to work hard, you're discounting your labor, but that's okay when you're young. As you get older and you get kind of fed up with this, right? You might start thinking, maybe I should own a business. Maybe I should be an investor. Maybe I should do something else besides keep my day job. But I think it's a motivating factor. So that's really what you want to end up with, is eventually become the employer.
Right. I
Yeah.
encourage that. Yeah.
Yeah. Yeah. With some of my children too. So they're doing the same thing. So let me just go over the history of this whole thing, and I'll make this brief, and Ray, you can correct me. You're really good about this history. This is my take on it. Okay. So I believe we had the Civil War because it was part due to the implementation of the tax system. The Federal Reserve Bank, I believe, is a franchise of the Bank of England from 1698. Okay. So the world system kind of needs this. I'm not going to get into that too much, but the history in our country is that whenever the banking system, in order to function, in order to create currency, it needs a tax system. Without the tax system, you don't have a strong military. You really need the way to move money around and then make it disappear. And this is what's happening. So it couldn't take place as much as our Congress tried to bring in laws and procedures to impose an income tax. It always was ruled unconstitutional. So what the clever bankers decided to do was, among other things, but the summary is, they created a system of statutes that did not create a duty to pay or to do anything. It didn't create a legal duty of any kind. And then they used the media to make people believe that it was your patriotic duty to do so. And then they marketed the implementation of the 16th Amendment as creating a new taxing authority for the United States. Now, listen to what I just said. Part of the scheme was to get people to believe that they had to participate. And then once that happened, and they did this during World War II, it became much easier. On a large scale, they did it in World War II. Now remember, let's think about this. So the Federal Reserve Act, along with the Internal Revenue Code, was enacted simultaneously, 1913. They have to have them together. And then you had what, till 20 years later, there's a legal aspect here under international law, but 20 years later, we had the, roughly 20 years later, we had the, what was it, the stock market crash, right? Like 18 years later, but it wasn't until 1933 that FDR came in and changed everything, okay? Because they had 20 years of aging for the tax system. Now, you can find the record of this in your congressional record, but you can find it in the paper version, maybe online, but the paper version of the United States Code in Title V, which is known as the Administrative Procedures Act, AKA, and you'll find this in the book, I did not make this up, it's known as the Government Reorganization Plan. So the implementation of the Federal Reserve Act and the Internal Revenue Code was to reorganize the government's bankrupt situation. All governments are bankrupt. It's just a clever way to do it. So they created basically the administrative arm of the government. So you have this melding of all the, the executive power and somewhat the rulemaking power and all this stuff, okay? Excuse me. So
It was like a fourth arm of the government they created.
yeah, and it's very useful, actually. I think it's very clever and useful. Just to understand what it is, and we kind of need it, and we can work with it. It's kind of necessary. They tricked us, but it's kind of necessary. So
It's trickery.
So let me just give you some more references. So I just gave you a reference to Title V, Section 552A, that's lowercase a, of the Administrative Procedures Act. Now, this is a very important aspect of law. It governs everything. It governs every interaction you have with the executive branch. It's really helpful if you understand how this works. And the rules of civil procedure. Okay. Now, I mentioned the 16th Amendment. I forget what year that was, but it was challenged in a case, not a couple, it was three years after, but three years after the implementation, the enactment of the Federal Reserve Act and this sort of thing. So there was a case that made to the Supreme Court. It was called Stanton versus Baltic Mining Company. Stanton versus Baltic Mining Company. And the legal citation is this: Stanton versus Baltic Mining Company, 1916. That's it. So you can find it on the internet. Now read it. It's very complicated. It's very long. You can run it through the AI and ask it for the holdings of the case if you want. And I believe what you'll find is that the conclusion of the court, one of the holdings of the court, was that the 16th Amendment did not change the Constitution. It did not give the government more powers of taxation. It simply reaffirmed its authority under Article 1, Section 8, and I believe Clause 17 even, but at least Section 8. Okay. So the government's always had the authority to collect taxes, but not in the manner in which it's being done right now. For example, wages under 3406. Okay. You can look this up. If you look up wages under Section 3406 of the tax code, what you'll find is the definition of what wages are not. This is how they do things. It's very interesting. I mean, this is when I started studying it, I thought, okay, there's something here because I have to read this. And I spent several years reading through this, I hate to admit. And I literally would, some days I would come to the law library and I would have like all these volumes, and because 3406 keeps referring to other sections of the tax code. And so I just go pull that. Okay, let's go look at that too. Next thing I know, I'm like following this maze of regulations like this. I'm thinking, what the heck? So they make it so complicated. But here's the bottom line. Here's what I concluded. Wages are paid to government employees. If you work in a private sector or a public company as an employee, you're an employee, okay? But you're not an employee in the same standing as a government employee. That's different. You're in the private sector, okay? So ironically, your congressmen are wage earners, but they flipped it all around and made themselves exempt.
Mhm.
So this is what's going on. So they got people to believe that they were required, there was a new legal duty. I'm sorry. Sorry for coughing. This is very similar. This trick has never changed. Look at the Financial Crimes Network, okay? The new FinCEN BOI, they tried to pull that on us the last couple of years, right? And it did not create a legal duty for anyone, but you see what happened in the professional community.
Yeah.
Every professional in that space was telling everybody, you must do this, you must do that. And so that's what they rely upon. They rely upon the professional to tell people to do things when they don't have to do them. And so you're acting against your own interests. Because who are you going to rely on? I mean, you don't have time to spend all this like I do. You don't have time to spend all, learning this stuff and learning the tricks and all this in the history and where we are today. So that's why I read this stuff and I say, okay, guys, this is nothing new. They're not creating anything new here, but if you participate, then you'll be required once you do it. Once you get your FinCEN identifier, right? Now you're one of them. So that's just how the system works. So my original point here is that there's no legal duty to file a 1040. However, a jury can be convinced that there was a legal duty and you can be convicted of the crime. If you want to go look at what is it, 7201, I think it is. 7201. In fact, we should pull that up right now. I should do a screen share and show you. Let me just do something.
See, another thing they do, John, that's really interesting is they're cross-referencing statutes that are excise tax over for income tax liabilities. And there are no income tax statute liabilities because there's no liability for income tax.
Yeah, so here's the thing, the interesting thing, okay, so if you look in section 7701 of the code, it's all the definitions. I believe it's for all sections like A, B, C, D. And the thing being taxed is what? It's income, right? Right? Is income.
From what activity though?
Well, okay, but let's not even get there yet.
Okay.
Ray, you're too smart, man. All right, so is income defined?
No.
Okay, why not? It's the thing being taxed.
hmm
If you bought some land and there's no description of it, do you think that's binding on
I
anybody?
think they define
No.
income as income. They say the definition of income is income.
Okay, correct, and they're correct. I mean, there's nothing wrong with that. It's
Yeah.
just, let me just show you.
Mhm.
Okay, so I'll have to.
Oh,
All
gee.
right, I'm gonna do a screen share real quick.
Supposed to be capital.
Take some break. Okay. So here's the criminal statute. Let's call it criminal statute, right? This is what your attorney will refer you to. Under 7201, it's if you attempt to evade or defeat a tax. It says any person who willfully attempts to in any manner to evade or defeat a tax imposed by this title. Right? Here's the penalty. So what's the next one? Is it 7203? Is that the one I want to go to, Ray?
Yeah, 72. And the authority reg for 7201
Yeah.
is 27 CFR Part 70, just like 7203.
Right. So what's happening is, and I can tell you firsthand from my very first case in the 90s, that what was happening is the gentleman I was working with he was a flower farmer. In fact, he was the one that was making all the flowers for the Macy's Day Parade. That was his career for like 40 years or however long the parade's been going on. But this is back in the 90s. And he was being taxed for manufacturing pistols and revolvers. And I found this by asking the disclosure officer at the IRS for his individual master file and more complex components of it. I'm not going to get into that, but I was able to show that the IRS was taxing him for something he wasn't involved in. So it's not enough that you have income. You should have taxable income. Most income is not taxable.
Right.
But now people act as if, and this is how I talk to you, every one of you. I act as if I advise you as if all your income is taxable because I can legally avoid or minimize the tax without discussing what I'm going to show you in just a second, like Ray's alluding to. The tax has to do with a type, kind, or class of tax. There's a specific taxable activity, and those are defined in Title 27. Has to do with alcohol, tobacco products, and firearms. But you can't use this information to argue with your IRS agents. You need to understand this though. I never argue with the IRS. If I find myself in a situation where, I see someone's arguing with the IRS, I know he's already lost. I have to do something different. I'm not going to argue with them. But anyways, this is very interesting. So this statute here, this regulation, or this is statute, it says any person required under this title. Now look at, if you just glance over this whole section here, look at how many dependent clauses are. This is grammar. This is important. You just step back for a second instead of trying to, look at how this is written. Look at each line and where does the period show up? The whole thing
Not
was
one.
one sentence.
The key is the first three words, any
Thank you.
person required.
But it's important to step back and look at this. This is a one sentence, whole paragraph with a list of dependent clauses.
Mhm.
If you just put this out on a page on your file on your computer and you just hit the return key for each comma and you just see this long list of dependent clauses. If you guys remember from English class, don't have a seizure. It's not complicated. But like Ray said, any person required. This is more important than defining income because who is a person required?
Yes.
I think I have the answer.
A federal employee.
Well, I think I have a better answer. That's good. That's a good shot. But I mean, hey, I can be liable if I go to the casino and I win some money in poker. I got to pay tax on that. That is a taxable activity. My winnings in poker are taxable activity.
Mm.
All right. Gambling is taxable. Oil drilling is taxable. Manufacturing hazardous materials, weapons, things of this nature, right?
Mhm.
These are taxable activities. But they don't say what person is liable. I'm going to tell you who it is. Any person required. I'm going to tell you who's required. And the person who doesn't pay, right? Who's required to pay or file an estimated tax or make such return. And
Someone who's engaged in a taxable activity?
that I would say so, but I'm gonna say that even if you're engaged in a taxable activity, this is perfect for what I'm gonna tell you. Even if you are, you have to be assessed the tax.
Mm.
So let's just say you're required to report this. You're required. Let's just say you're required to report when you're involved in a taxable activity, and so you file a tax return. That's the only way to communicate with the IRS, unless there's some other medium, right?
Mhm.
So you file a tax return, you become the person required. Why?
Yeah.
It's because of what you did. There's no
Yes.
statute that makes you required. What? There's no statute that makes you required or anyone required. But because you did something, you then become required. You
Mhm.
create the liability. Now, let's say you filed the tax return. I got a case right now in Ohio, having fun with this one. This state case, but same idea. So I asked the hearing officer, who's actually the attorney for the state of Ohio, Department of Revenue. He's trying to act like the judge too. I said, my client filed a tax return, and we just want to know. I said, I was representing him actually, and I said, I have his money. It's $20,000. I said, I have it, and I'm going to pay it. But my job is to make sure I pay a debt that's valid. So before I release the funds, just like your insurance company would want an estimate on something, right? Before it releases the funds, I'm a professional. I'm an advocate for my client. I said to the government, my client, I agree, owes. But before I release the funds, I need to see the government's assessment that this is correct. And all he could do was refer to the tax return. And I said, so when was the tax owed? Before he filed or after? He had to come back to the tax return. I said, well, and there's a particular statute in Ohio that says the government must assess the tax. So a tax liability comes when there's an assessment. So the question is, do I need to tell the government what money I made and when and how and what activity I was in to make the money? Let's just say yes. The government then has to take that information, let's say from your tax return, and make an assessment. What are the elements of an assessment? Ray, you probably know. What are the elements of an assessment? Let's say it's a piece of paper. Then what? What's on there?
Well, I mean, you got the elements are in that.
The name of the
30
taxpayer?
Yeah.
You? The
It's
date of the
301
assessment?
6203-1. So the
The
elements.
taxable activity?
It'll tell you in 6203-1, yeah, in the
Right.
CFR. So the type of tax, the class, type, or kind of tax,
The
period
identifying
of it.
information of the taxpayer?
Yeah,
Payers
how
of
much
the
money
tax.
was subject to the tax. Yeah, all these things, right? So important. And the
The
assessment,
amount assessed.
of course,
The summary assessment. Yeah.
and there has to be a citation as to applying where the rate came from, what regulation imposed the rate, and
Mhm.
regulation identified the tax.
So tax table, yeah.
And the government has to do this. You cannot assess yourself.
Mhm.
The government must do this. Now, what the case law says this. The case law says without an assessment, there is no tax liability.
Mhm.
So when does assessment come? When you file a tax return? No. But they act as if, okay?
Right.
So here's the important part of the assessment.
Bastards.
Yeah. There has to be an assessment officer.
Mm-hmm.
Hey, well, let's go back to the bankruptcy, the Title 552A. It's part of the administrative procedure which preserves the right to be heard.
Yes.
Okay, so we know this as the due process right. And all you tax protesters out there don't understand what it means to have due process. You're just making up a bunch of garbage that doesn't do anything. I'm telling you how to apply this right now. So this is very important. When there's an assessment officer who's accountable for doing it correctly, and he's going to do it under oath. Just like you're going to file under oath, he must also, or she must also, right? But he's in his official capacity as an assessment officer. It's the government. So if the assessment officer makes an assessment and says, here's your bill, that's the United States saying you owe us. Okay, fine. That's valid. And if here we go. Let's say I disagree with it.
Yes.
Okay, I can appeal his assessment. I can take it to the court. I can have it reassessed. I can ask for a reassessment. I can say you made a mistake. I can show him how. I can have a rehearing. There's a whole set of procedures, but I cannot do that if there's never been an assessment, because I'll be denied the right to be heard because there's nothing for me to contest. There's no record for me to contest. That's like if I go to I love analogies. If I go to my favorite restaurant and I order a nice meal for my family, and then the waitress comes over and says, is there anything else that I could bring you? And I say, no, thanks. You could just, we were ready to leave now. And she could say, okay, well, just give me some money.
Right.
How
much?
What am I going to do? Take out my wallet and say, tell me when to stop handing you $20?
Yeah, here's my wallet.
Right.
Take what you need.
This is why your government, this is why
it's interesting you brought this up too, John, because I mean, I just happened to look at this motion to compel that filed a while back. Now listen to what the government says. An assessment is a bookkeeping notation reflecting an amount a taxpayer owes the government. It is not a document. The United States cannot produce something that does not exist. And
so the government admits there's no assessment, therefore there's no liability, but yet they're going to play along. They're going to say, well, there's got to be a liability. We can't just have this, And, so there are cases that struggle with this because the judge he's going to allow the government. Now, here's the point. The government has to produce the assessment because the assessment's based on could be hundreds of pages of documents. You're not supposed to come in with hundreds of pages of documents and say, this is the assessment. You need in a summary of it called the assessment, for which, it gives you, now you have something specific that I can appeal and have reviewed. If you come in with a bunch of pages of documents, it's possibly fraud. Think about it. If I go to the IRS on an audit and I bring in too many records that are not organized in papers, they actually have a procedure for this. And I hate to admit this, I've read their manual many times, and they will conclude or act upon the idea that you're attempting to commit fraud if you bring them documents like this. But yet, when you're in federal court, the DOJ likes to do that. Why? Because they don't have an assessment. Therefore, there's no tax liability. And if you go look at the pleading, if you're in federal court with the IRS, the pleading is rife with, replete with phrases, the assessed tax, the tax assessed, the assessed tax, the assessment, the assessment. They say that everywhere in almost every allegation. And when we ask for the assessment, they go,
what is this?
But they push the 4340. What they do is they push that 4340, say it's self-authenticated and cover up.
Yeah, 4340 is like what that's
this is the trickery. They call it summary record of assessment.
There you go. Summary record of assessment.
Payments and other specific information.
That's the one for a county, right?
Huh?
Oh no, that's the RACs.
The 4340. So instead they have a summary record of assessment, which is really supposed to be the 23C. But then they come up with this 4340 and they call it the summary record of assessment, comma, payments, comma, and other specific information. Well, we know in law everything's specific. That is not the same.
Right.
And
well, I don't get too far into but what you understand the idea. Okay, the principle I want you to take away from this conversation is that there's no tax without an assessment. There's no duty to testify. There's no legal duty to testify ever. But you can't use a legal defense like Fifth Amendment to not testify on a 1040. You just don't testify. You don't have to argue with anybody.
And John, what about the fact that if there's an assessment, then that should give you the ability to cross-examine?
Exactly. That's part of the administrative record, which gives you the opportunity to cross-examine. So what does that look like? I can do it administratively. if I'm not in court, I love it if the IRS wants to sue somebody because now I got a whole nice set of rules that are very strong, and they do try to weasel their way around it. But sometimes you can beat them, sometimes it's harder. Karen, what did you want to ask before I continue rolling along?
Yeah, well, I'm sorry to interrupt you.
Okay.
So on this so-called official assessment that they will never produce, if they are giving you, trying to trick you and give you something, say, calling it as an assessment, it sounds like one easy way to tell is there needs to be an assessment officer that's going to sign under oath. And
And
that's just never
we
going to
ask for that.
happen.
The best test is in federal court where we ask for the assessment officer and they produce an IRS representative who admittedly says, I know, I don't know anything.
Mhm.
I've seen this in many, many cases. So,
And
yeah.
it also would have to say what the taxable activity was, and it would have to have the tax
Well,
table.
that would be the
and it would have
examination of
to-
the officer. Yeah, we would ask
Right,
them.
right.
Yeah. What
But
was
those are the
tax-
criteria of what is supposed to be in the assessment. They list
Now,
what's supposed to be in
you
the
can get
assessment.
that by going through the disclosure office and asking for the individual master file and decoding it and all that jazz.
Mhm.
But in like the case Ray's talking about, this one, the idiots were so stupid they don't even understand. They're so lazy, and the judge helps them all the time, and they went
Yeah.
and committed a bunch of stupid stuff, so we could presumably use it against them. But it's it's like the judge is helping them all along. But imagine if the IRS started assessing. What's the problem? Just make an assessment. Okay. Well, what happens if the guy that works at the mechanic shop gets an assessment and let's say they don't show it to him. But let's say one day his attorney says, let me see all your records. And then on the assessment, it says, hey, you've been taxed for the last 17 years. You've been taxed for manufacturing explosives.
Right.
Then the truth is out, right? Maybe. So that's what's going on in the background. But that's why I don't talk about that too much because it's not necessary. We don't need to talk about that. But for the purpose of this call, I want you to understand the whole idea behind, I'm not trying to escape paying taxes because I'm using dollars. I'm paying taxes like everybody else. I'm just not going to testify about it because we're all using dollars that are always diminishing in value. Okay, so I'm not saying that inflation alone is that taxation, but the fact that I'm using dollars puts a demand on the dollar, which makes the system work. Now, there are ways to take dollars out of circulation, which is necessary to make the system work. You create money out of nothing for many reasons. You do it through the banking system, currency that people can use, and then you need to take it back out of circulation. Otherwise, your whole system will fail. And it's so amazing that the United States dollar is still around after what? It's been 110 years now. It's amazing. And it will continue. You're going to see it's going to continue. It's going to morph into something new. It's morphed several times already. 1971, 1965, I think 64, 1986 possibly, and 2001. And now we're going to start seeing the digital currency come in, the cryptographic currency, the blockchain type technology that's going to come in. That's going to, let's say, save the dollar. But that's what makes our country strong. It's just how it is. It gives our military the power that it has. It allows us to develop that technology. But anyways, so although there's no duty to do all these things that people think that there is, and they're scared of not doing it and this sort of thing, you should be scared because you could be indicted for willful failure to file, indicted for a person who is required and failed to fulfill his duty. It could happen because you have jurors that would say, yeah, I've been doing that for years. What's wrong with that? Why doesn't he do that? Or if you make a lot of money, that could be another thing used against you. That's why you don't see it too often, but once in a while you'll see famous people, really persecuted in the news, like Wesley Snipes, I hate to say.
Yeah.
And he did something.
Willie Nelson.
Yeah, Willie Nelson. I mean,
Yeah.
Wesley Snipes did some dumb things too, so they made an example out of him. He was following, and I get into the tax protest. So he was following some tax protesters. That's what got him in trouble.
Wesley Snipes.
Yeah, so I'm going to speak generally. So the tax protesters, that what they do is they don't understand law. They claim to use some administrative procedure, and then they want to talk about whether or not I'm a person and all this nonsense. And so they don't understand the merits of a cause of action and the need to discuss the merits of something. And then they don't understand the rules of civil procedure. They're too lazy. They want to rest on their conclusions. And then they tell people you need to file documents with the IRS to get out of the system. You need to revoke your status and revocation of election and all this nonsense. And it's just getting people in trouble. And I've, so many times I've talked with people that did this, the next thing and the next thing and the next thing. And there's got to be like 40 different schemes. And I think some of these were introduced into let's call it the patriot community. I don't know if you guys know what I'm talking about here.
There's only 39. I did all of them.
Okay, it probably is, yeah. But I think it was introduced, I'm gonna just say by the CIA. I think they've introduced these stupid ideas for the purpose of undermining people that would oppose the taxing system. And I'm not saying I oppose it. There were some problems with it, as you saw in 1997 with the congressional hearings. I don't know if you guys were watching that. I was watching it. I was working in this. I had been 5 years working in this, or 4 years working in this area when I was watching this. And it was interesting because the IRS has caused some very serious problems in people's families to a point where people were killed themselves over the debt, and the IRS was sued for wrongful death. I don't know if you're aware of this. And so,
What?
I just heard that.
Yeah, people
Yeah.
You were able
suicide.
to link the CIA to it?
no, I'm just saying
Oh.
for the IRS doing bad things.
Mhm.
Okay, that happens. But I'm just saying these patriot tax protester theories, I think some of them were introduced by our government.
Yeah.
Because I've watched what happens. I've watched the IRS do this, and I could just tell you in so many years, you can't see this unless you do it for a long time. And I watched people collect themselves into groups and adopt a certain strategy and say, we're going to do this. Yeah, the system is this, and we're going to do this thing. And they give it this name, and then they sell it to a bunch of people. And it's these stupid documents, and they sell it for a lot of money. And everybody thinks they're free. They're finally free. And then what happens is, once there's been a plateau of membership of people doing this, now the IRS has a nice new mailing list of people to go and examine, and then go wipe out their property, take all their house, their thing. And that's what they were doing.
Mhm.
That's what they were doing when I saw this in the 90s. And then I realized, okay, so the common denominator here is, let's say I don't know anything about the tax code, and I still don't. I'll tell you, I don't think I know anything about it. I just think it's a mess. But the common denominator was that people still had stuff. So what they were trying to do was they're trying to keep their stuff away from the IRS and still not file tax returns and still not pay. And so what they failed to do is separate the property rights or the property from their estate. That was the problem. And so here's what the IRS would do. Let's say a person conveyed its property, let's say his income or whatever, or his house or whatever, and they put it into a trust. This is the common thing that people say. They put it into a trust. And so all the IRS would do is when they went to levy against the person's property, they would add another notice of levy that named the trust as the alter ego of the person. And they would ignore the trust. They would just step right through it as if it didn't exist, which it didn't exist. And I can tell you firsthand, these people didn't know anything about trust organizations. They just thought it was a great idea to pay $2,500 for a fancy sounding name, Massachusetts Business Trust, or the Panama something, it doesn't work. So, but anyways, there's so many people out there promoting this. Hopefully it's going away. I still think there's some groups out there promoting nonsense, but sending angry letters to the IRS and if you're involved in an argument with them, you lost. You did something wrong. You don't need to argue with them. I've been to so many audits. I used to travel to the client's location, and I would stay with them for a day or two, and I would go to the audits. I did my time. I would go there and I would sit next to the client across from the IRS agent, and I would represent him, and I would go with the records, and here's what I learned to do. End the audit in the one meeting, end the audit with the least cost to the client. And I would do it every time. And sometimes the person already had a CPA. So, and they were in their third audit session. So that to me demonstrates incompetence. If you have to talk to the IRS 3 times and you're a CPA, you already failed. So I would just tell the IRS, I'm the advocate, I'm the new person or whatever. Or I would send a letter and I would say, excuse me, I would say, you're going to get one more meeting. We're going to wind this up. Then you're going to do your job. I'm not going to meet with you again and again and again. And that would scare the CPA and he would quit. But then we would go there and end it. And I have my technique of doing, handling that. I'm not going to go into that right now, but so I got to see firsthand what was going on. And so people just have a lot of misunderstanding about this whole system. So when I'm talking to clients and they're saying, hey, John, what do you think about what do you call it? This unincorporated association or the 508, blah, 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 and I say, okay, what is that? That's a corporation. It's exempt. And I'm saying, okay, so what are you doing with that? What's your purpose? That'd be like saying, hey, Ray, what do you think about my hot rod? Okay, got a hot rod. What are you doing with it? You can still drive the same speed limit as everybody else. All right. So
Mhm.
I was asked, what are you trying to do? I got some people on Telegram right now. I'm asking them, what is your purpose? What are you trying to do with this trust? What is, what's your plan and what risk are you trying to manage? And I
Mm,
look at tax liability as a financial risk, just like I look at the possibility of you being sued by a creditor or someone making a false claim and running you through the courts and you incurring costs of litigation. That is also a financial risk. So some of the rules I follow for my clients, for myself, is my first risk I'm going to avoid for my client is I'm going to set him up in a way with what he wants to do with his property and everything and his income so that he can avoid the cost of litigation. If I can do that, I pretty much beat everybody. If I can't do that, then there's step two, right? There's all these different things, but that's my number one. And I don't ever want to create a situation where my client has to argue and justify something. Like, for example, someone might say, hey, what do you think about this type of trust organization? And I say, well, that sounds pretty fancy. I say, if the trust were sued, who would defend it?
yeah.
Shuts down the conversation right there. Because you didn't plan for that. You didn't plan to avoid the cost of litigation. You just thought you were so smart, and maybe you are.
Mhm,
But anybody can be sued. Ask Bill Clinton, right?
mhm,
So, anyways, so what's the liability? It goes back to how I originally said in this call. The liability for taxes comes when something happens to create a duty for the government to reconcile reports it received. The government's an insane person. It can't see you. It can just see documents. It has to act upon testimony. It's a machine, and we want it that way. But you
mhm,
have to understand what it is. So
mm,
the liability comes when a tax return is filed. Then it follows because you get tax reports, right? So you have to understand how that works. Now, that's another reason why I use a limited liability company, because now I've got a new person that the law recognizes as a separate person from yourself if you have the ownership correctly, right? If you're using it correctly, in which I can receive money and property rights and titles and all this stuff in this entity with a completely different tax treatment. I can take this entity and I can make it file an S corp. It can become an S corp. All I got to do is add a new document to my tax return for the LLC, right? Maybe I don't want to do it that way. Maybe I want to convert it to a C corp. I can do that in some jurisdictions.
mhm,
Maybe I want to file my LLC. I'm going to file a tax return for it as a partnership for my partner and myself. And in the same time I'm doing that, that's my tax treatment, but my protection is coming from charging order protection by the state. And again, that's why I pay the filing fee, right? It's for insurance. I'm not, now I'll get into this in a second, but so I can do many things with an LLC. I can do less things with a C corp. Remember, a C corp, why is it the letter C? It's a type of a taxable structure, okay? It doesn't mean that C corp automatically has a tax liability. It just means that it would be under a particular category of taxation if it were to file a tax return, which it probably
mhm,
should. Probably should. It's an insane person. It doesn't have rights, okay?
mhm,
It has things that are written by statute. So, but with the LLC that does not file, it's a pass through. Much like if, let's say, you sold a car which is not a good idea, but let's say you sold a car and the person paid you through PayPal. You have some pretty good fees there, but PayPal is an escrow service. It's an escrow agent. It's kind of cool. So you sell a car this way, right? So let's say you sell a car for $10,000 and PayPal takes out its fees, right? And gives you the rest of the money. You give the car up, the title, and all this stuff. Does PayPal pay a tax on the 10,000? No, it pays a tax on the fees it collected from you in the transaction, the net, right? Which is its gross income, and the rest is yours, right? So this is the same thing. It's a pass through. It's a flow through. It's a payment processor. We can use an LLC in that way. So then that's why I caution people, if you filed returns before and you're taking money and you're still filing returns and you're taking money from the LLC, you need to account for it correctly. And the way you do that is your living expenses should exceed what you're reporting just a little bit in most examples. What I'm telling you by that is if you're making millions of dollars a year, there's no need to file millions of dollars and report that as income if you structure it properly. You're only needing to report money that would justify you paying your living expenses for your demographic, for where you're living. Now, I'm not saying underreport. You need to separate that money out of your estate. And here's a very quick, easy way to do it. You can form a corporation and sell stock, right? And have a bunch of shareholders. And that's definitely out of your estate, except for your interest in the shares, right? but you can do that on a simple version when you just have a limited liability company and 2 owners. That takes it out of your estate, which means I can park money over there and pay myself part of the money out of there, and I'm not liable for the money that the LLC has. That money can sit there in a tax deferred status. Accountants, by the way, hate when I say that, but they cannot, there's no way to go against it. I ask them, okay, so where am I wrong? They say, well, it's just wrong. Look at section 61. And I go, okay, well, that's there. Who's telling me what tax treatment I can have? Nobody. But when I choose one, I'm going to be held to it. So if I file something on a penalty of perjury, well, then that's it. That's the way it goes. So it's myself that determines the liability I'm going to have. And that's how our whole system is. Like I said, that's the way they got the system in place, is by creating it to where you can't argue that any provision of the tax code, I mean, it's survived for a long time. You can't now argue that it's unconstitutional. It's survived every test. It is constitutional, but it tricks you into participating in these ways. But the liability only comes by what you're doing. I don't know if that assuages anybody's fears. I mean, maybe I'm trying to do that, but I want you to be kind of informed about the whole picture of how this really works in reality. And then don't listen to these tax protesters. You need to file this. You need to do a revocation of election. You need to change your status, your citizenship. Look, your tax liability does not come from your citizenship. Never. Since when? Look in the tax code. Where in the tax code does it say the US citizen must do this? And even if you change your citizenship, all right? So in order to get the IRS to the government, the United States, to agree that you're not a US citizen anymore, you literally have to go through the expatriation process.
Hmm.
And if you want to come back into this country, you need to do so as an immigrant. You got to go through the whole process. Yeah. So there are people who are not US citizens that file 1040s every year that are all over the world.
Right.
Yeah. These are known as US residents. Yeah. So it's not what these people are saying, and like going to the Philippines, where's this place? Puerto Rico, going to Puerto Rico, right? To qualify for the exemption. Sure, you can do that. That's really silly, but you could do it. But why? It's because you're ignorant. You don't know any better. Like, for example, the people that use Panama's foreign jurisdictions for holding their property and stuff. I ask a lot of them, what are you doing in that foreign jurisdiction? Well, I'm using an international business company. Okay, why? How are you doing that? Well, I have an IBC account in Panama. Okay, and what business are you running? Well, I'm not. Well, I go, do you put money in there? Yeah. Where does the money come from? Well, I make $250 a year and I put half of it over there in Panama. Okay, so all you've done is draw attention to yourself. You don't have a real need for an IBC. What the heck are you talking about? Because all that's needed is to simply change your property rights. You change the way in which you're incurring a liability to where you don't have a liability. Now, there are some things you can't avoid, right? There are sometimes you just have to pay, right? But for the most part, we can avoid it by simply changing our property rights. And this is just a very basic asset protection strategy. You change your property rights. What do you think an estate plan is?
Mm.
An attorney writes an estate plan. What is he doing with your property rights? He's changing them so that you get better treatment in probate or avoid probate. He's changing your property rights. It's nothing new. That's the key, is changing your property rights and legally avoiding a duty to reconcile, allowing the government to avoid a duty to reconcile. The government's a machine. It's only going to do something when it has a duty to do it. Then yeah, there's abuse there. I know. There's some agents, some employees that don't like people, or they have it's the tax protesters that have really prejudiced a lot of the government employees. Okay.
Mm.
So sometimes they're mean to the rest of us. So when I deal with, like, when I'm working with somebody and I'm talking to the government agent, I'm speaking his language so he understands. I'm not trying to protest anything. I'm just saying, we have to proceed based on the rules, and here's what we're going to do, and this sort of thing. And they respect that many times. Sometimes they're still mean, but we can get a lot more done if we're intelligent and we're understanding what it is we're doing. Wait, there's an administrative procedure with the IRS. It's very useful. So it doesn't involve sending 27-page protest letters. And I have to say, I'm probably, one of the first people that would do that way back in the 90s. I thought, this is the thing I need. In fact, this is how I started learning this stuff, is when I went to see a guy, because I knew a guy who knew a guy who knew another guy who sent me to a guy that could revoke my social security number. I said, that's interesting. Let's do that. So I went and sat with him for a while, and he had this long document. It was very impressive back then when I saw it. Today, I would say that's a nice history lesson, but it's useless. So it didn't do anything for me. What I realized is that you can choose to not use your SSN, which is what I did for many, many years, decades. I didn't use it for anything. And that's another story. But using your SSN validates the use of it. It's not your number, was the bottom line I realized, is that you cannot revoke something that's not yours. It's a number that was assigned to you by the government. And it's not just that the government owns the number 7, okay? The fact is, the government issued a number and assigned it to your name, which is identified by like 3 or 4 points of verification: your name, birth certificate, date of birth, all these records, right? So that number combined with your date of birth and legal name makes it what it is. You cannot revoke that number because it's not yours, right? Just like your date of birth cannot revoke that. You can lie about it. So you can choose to stop using the SSN. I've done that, and sometimes I have to do that for people. Sometimes they're, it's necessary to solve their situation. For the most part, I tell people don't bother. A couple more points. There's something, yeah. So the Amish, they have their private association. I don't know. Some of them have SSNs. I don't know. I can't really speak to the Amish. I see your notes here. And Mocha, if you wanted to, throw me some of these comments here. I'm sorry if I'm missing.
Sure. Well, a few people are just asking if you could kind of talk again about what should people do who have a W-2 job, and why do you say don't file it exempt on W-4? Just kind of the W-2, W-4.
Well, why are you exempt? How are you exempt from a tax that everybody's paying? You're not. You're not exempt. An exemption means you have a legal duty to pay, and for some reason you don't have to pay. So
Right.
What's the legal duty to pay? How is it different than anyone else? What is the basis of your
I
exemption?
think the exemption too was something to do with college credits or something like that. And on
Right.
construction sites, people used
Right.
to all file exempt.
There may
Right.
be exemptions for
Then they would
real,
come
but
get 'em.
for many people just don't want to pay. So
Yeah.
what I suggest is you're in a W-2 situation, and I've been there. So then what I just did simply, this is what I did. I kept my day job, and I started looking at, I've always been an entrepreneur since I was 12 years old. So I just continued doing that. And I just found other ways of making money that I could do while I was still keeping my day job. And at some point I started making a lot of money, and I was able to quit my day job. And so that's what you want to do, is make more money. And so a lot of times it's funny, people are afraid to make more money. It's like in cryptos, they have a windfall, and then everything stops in their life. They're afraid to take the profits because they are afraid of taxes. Even if you don't know anything about the taxes and you just pay, it's better to take the money and go put it somewhere else and make more money. So I tell people, focus on making more money, not avoiding liability. Sometimes it's okay to have the liability.
Here's another question for you, John. Why, could you just go back over why you prefer an LLC over a business trust? Because some people are saying, a business trust is not a creature of the state. That's one thing that they're assuming, and does not have to be registered and has no annual fees.
It's a good point. So creature of the state is not a problem. That's not where your liability is. It's a tool. When you register an LLC or a corporation with the state, you're using a tool. Now, what you're getting is, you're not getting the LLC or the C Corp or whatever you're registering with the state does not automatically have a tax liability. It's still up in the air. You have to decide what that is or not. That's what I'm hearing on the tax purchaser community. They think that if it's a creature of statute, then this is conclusive, all right? And it's not. So here's what you're getting. When you register your company, even a trust, when you register it with the state, your fee that you pay is giving you indemnification. And let me explain what that means. You're getting insurance coverage. You're paying a tax in exchange for indemnification. So this is a very important concept. Good question. So, and I'll talk about the difference between the trust and the LLC too. Remind me. But the indemnification works like this. If I run my company correctly according to the statute, like for example, an LLC, if I have myself and my brother as owners, then his debt liability would never reach into the company, nor would mine. And unless we together had personal debts,
Mhm.
Only then could the creditor for the both of us together reach into the company, right? In which case we would just add another person to the company. So you're getting charging order protection. This is what that is. You're getting charging order protection. Now, this is similar. This is similar to, let's say an employee for a corporation that opens a bank account and he's running the books for the company and handling all the expenses and all this sort of thing. And let's say he has some debts, but those debts, and like someone sues him and gets a judgment lien, cannot reach into the company because it's not his money. Why is it not his money? Because it's a corporation with many investors, right? So that's a situation we're creating with an LLC. We're separating the property rights out of any one person's individual estate and we're moving it into a new person that has zero liability now. You could have more liability later, but it's starting out fresh and clean, right? That's what we're getting now. On the difference here on an LLC, again, remember my first rule is avoid cost of litigation. Now, this is the thing about LLCs that people don't know. Your attorney's not going to tell you this. The attorney, okay, so an LLC where its articles appear on their state records, like you can go look up an LLC right now and just go look at the articles. It's public record, okay? If I'm a creditor and I'm suing John Smith, who's an owner of a company where his brother's with him, right? and I win and I get a judgment lien. Now I'm in the asset search. I'm going to search for some assets. I'm going to go get some stuff from John Smith. And I find out that John Smith has an interest in the company. It's a limited liability company. And I just hope he's the only owner. So I pull up the articles and I see it's him, it's himself and his brother. Now, I can be stupid and I can go to the judge and I can ask for a charging order against the company, against John Smith's interest in the company. That's what I can do. And the judge will probably say, are you sure? Because I can give it to you, but are you sure you want it? And the judge gives them the charging order, the writ of attachment to John Smith's interest in the company. Now, this limits the collection to any money that company pays John Smith. It doesn't allow the creditor to reach into the company and take any money out for John Smith's debt because that's not his money. That money and those property rights are shared with his brother. Unless you have a claim, equal claim against his brother, you can't touch it, right? Now, by the end of the tax period, the end of the year, let's say December 31st, if money is not collected for the charging order the judge gave him, the creditor, the plaintiff, the attorney's client will have a tax liability for the amount he did not collect.
Right.
What attorney wants to set up his client and walk him down that roadway and end up there? Do you think he's going to get more business as a debt collection attorney? It's going to be real hard, right? That's why I'm saying if someone's going to be halfway diligent, which they're not, by the way, but let's say an attorney is, he's going to look at those articles and say, well, can't do that one. And all the other parts of my client's life, I can protect and block that attorney here. And then where I can't do it there, I can do it with the LLC. Usually it's the most important things for the client is like his business, right? Or maybe it's his stock account, or he's going to sell some gold, or he's going to own an aircraft, right? The LLC is going to protect him in that way. So this is why I like that. I prefer that to a trust because let's say I use a trust. Now, let's say it's written perfectly and you can write a trust that will function like an LLC. But what you're not going to probably avoid is that attorney who's going to do the following. And this is where much of your risk comes from. It's the rules of civil procedure in post-judgment discovery. This is a hypothetical situation. You have a debt liability, right? And let's say you're a trustee on the trust, and maybe there's another trustee. And it's a good trust. It's written properly and all this, but you have a personal debt, right? Well, the attorney for the creditor may want to do post-judgment discovery, and he's going to call you into a depo, let's say a deposition, and he's going to ask you about where your property is and all this sort of thing. And he may ask you about whether or not you have a relationship or association with any trust organizations. And you're going to have to say, yeah, I'm the trustee on this thing over here, right? And let's say you've written the trust document perfectly. He can never pierce it. Everybody would agree with you. He doesn't care. The attorney would then ask you to disclose the trust, right? All the rights and obligations in the trust for the beneficiaries and the trustees. And he would examine it. And he would probably find some way to undo what you've done. He probably would. Now, let's say he doesn't. How much will that cost you? Lost sleep at night, money, again, it comes down to who's going to defend the trust. Maybe you can, maybe that's not a good idea, you know? So if I have an LLC, I'm probably not going to have to defend it. Let's say I had a client one time. This is a funny example. I know I told you guys this story. I hope that answers the question about the Massachusetts Business Trust. It's probably a good trust, but you may still have this cost of litigation and it may still be pierced just because. All right.
Right, and it also answers like how the charging protection, order protection works differently for the trust.
I want the statutory protection. No one's going
Yeah.
to argue with it. It's conclusive, right?
Right.
Yeah, the creature of statute. So what? Just look, it's like the analogy I always make. Just because I'm using a lawnmower to cut my grass, it doesn't make me a lawnmower. I didn't lose any rights because I formed a corporation. I'm the boss. I'm the owner. It's my property. It's a tool I'm using to manage financial risk. It doesn't make me a corporation. It doesn't create it's avoiding liability. It's managing risk. I'm getting insurance. I'm getting indemnification from the state. That's why I pay the fee.
Right.
So this one person she was my client, and she said, "Hey, I'm getting sued." I said, "Are you getting sued? Let me see. You know how I got to see the document, right?" And I said, "Oh, wait, you're not getting sued. Your company's getting sued." And so her LLC is getting sued. I said, "What's the LLC to you? What are you doing with it? Is it making money?" She goes, "No, it was, but I don't use it anymore. I still have a bank account." I said, "All right, well, I can help you defend it. Yeah, we can fight this. I just need $10,000." And she goes, "Huh?" I said, "Okay, I know that's too much. Let's do this instead. Because you don't care about the company anymore, and because it's the only defendant, why don't we go to the Secretary of State's website and amend the articles right now? Let's amend the articles, remove yourself as the member, vice president, and let's add the attorneys who signed on this complaint, who are suing you. Let's add them, make them the owners of the company." And which we did. We amended the articles. Never heard from them again. I don't even know what happened to the case, but they ended up suing themselves. They were probably so embarrassed they withdrew the case. We don't care because nothing happened from it. It didn't attach to her at all. And then all she had to do was set up a new company. So what? And that's what I'm talking about. You can just set up a whole new company and get the same protections and move on. I do this so many times with like a business that's operating. It might be making $5 million a year, like a dental office, right? So it's a mess because the dentist, he's being a dentist, okay? He hires an accountant or maybe an attorney to set things up. These guys don't talk about risk. All they care about is taxes. They set you up to pay taxes. They're not setting you up to manage risk. They don't even consider this.
Right.
Yeah. So what I do is after the fact, I come in there and I resurrect all the elements of managing financial risk, and I push in an LLC into the cash flow, and then I manage all the financial risk there, but I keep their mess intact. I don't want to change what the client's doing. I just want to eliminate the risk. And I'll do this right when the IRS is garnishing, levying the business income at $30,000, $40,000 a month. And that will shut down the IRS. And then I go to the IRS, I meet with them in person. I go with my client, I go to the IRS. I've done this so many times. And I say, "My client can't pay you. He wants to, but he needs this, and that, and the other." And so, we work it out to where it's not a financial hardship because the IRS doesn't care. They'll shut your whole business down and then you won't be able to pay, and then they don't get their money. They don't think about working that out. Ezekiel, what did you want to ask?
Hi, I got to get going. I just want to say thank you for hosting this, and I wanted to ask before I schedule a meeting, are you able to handle both federal and state issues?
Yes, they work very similar. Sometimes I have to look up the statutes for the state ones, but no problem.
Okay. And you can handle like liens and things like that?
Right. I have a unique way of dealing with liens, existing levies. Yes.
Okay, beautiful. Thank you so much for your time, and thank you, Ray, for connecting me to this group. And I guess I'll talk to you soon.
Okay. Appreciate you
Yep.
joining. So, all right. But yeah, I don't know that I'm forming a group. I mean, I like the fact that we have so many people here together and we're listening. We have similar interests. But when you see these other people out there talking about these crazy ideas, and just know that you don't have to be combative with the IRS. You don't have to be argumentative with them. Just don't do something that makes them have to do something. Don't create a liability for yourself. And I'm not saying hide your money. I'm not saying lie to them. We're just going to create a situation where I can move money around and I can do things legally and not have a tax liability because I'm always going to defer it, among other things. There's other things you can do.
Mhm.
Just very simply, I could acquire some property and then I can borrow against it. That's not taxable. You know, there's all kinds of things you can do. So, anyways, I mean, I hope I covered it. Did I miss anything? Do you guys, is there,
No, I think you
Yeah.
covered the prominent questions. Yeah.
okay.
Yeah. Thank
No,
you.
it's a good topic too.
You-
Very,
Yeah,
it's
yeah.
one that's big on everybody's mind because
It
it should
is.
be.
Mhm.
Well, if y'all think of any questions, I mean, you know, we can bring it up at the next call. I like to do Q&A. I'm happy to do that. Just let me know, you know, because I know it's a big subject and it's so many facts that it could lead to, okay, wait a minute, he didn't talk about this. What about the guy that said this thing, right? It's always something like that. But yeah, there's some basic
Hey,
concepts. Yeah.
hey, and John, can you just remind people if they want to be in like the ASIC Coins discussion group? How does that work? Who do they
Is
have
there
to
a discussion
contact?
group? Somebody, okay, so I apologize for shutting it down so abruptly. I just did it because there was too many, it was off topic.
Right.
It's nice that someone else set one up, as long as, I mean, it's up to you all. It's on Telegram. So
Oh, it's in the chat right now. Jay
it's in the
Henry just
chat.
posted it
You
to
guys are
everybody.
welcome to join. If you,
It's unofficial.
I might be in it. So if I am, I mean, if you guys want me to, you know, answer a question or something, I'm happy to participate.
Mhm.
I just didn't want to deal with it myself, but I don't want to create another group where there's a lot of people promoting tax protester ideas or political
Right.
things. They don't care about all this stuff. I mean, we all
Right.
have a political, you know, whatever, but I don't want to. I like to just do problem solving. You
Right.
know, not anyways, just problem solving. So if we can do that,
Yeah.
and
So it's in the chat right now, y'all, the Telegram link. So just click on that and you can.
John, you have another group too that's like strategic planning, don't you?
yeah. Now tomorrow I'm gonna do. I have whenever we can work it out. VJ and I, from Rogue News.
Mhm.
We talk about being an entrepreneur, and he calls it a strategic life. That was his idea.
Okay. Yeah.
And so, like for example, I think it was I think it was last year, maybe a year before that. He and I did an interview where I demonstrated how to use AI to create a business plan for an e-bike dealership.
I remember that.
Yeah,
Mhm.
we actually did that, he and I.
And they went big after that too.
We actually, yeah. We actually, he and I did that, and we're at the stage now where we could do some marketing. So we have the contract and everything. We just have to do the marketing, but maybe I'll share that with you once we get it rolling.
Okay. Is there a discussion group in that Telegram group for the Go Baby Trade people? Because
Okay, Go Baby Trade. I don't know if I have a discussion group on that one, but we have that video that covers everything that Ed and Attila did.
Okay.
And Persona was
Yeah,
on.
there's a Go Baby discussion in there.
Okay. Yeah, I
So
think
it's so just look in the chat where there's that Telegram link and it's broken down into topics and there's a Go Baby one. So
Mhm.
you'll find it
Yeah.
there.
And Jay Henry's asking about voiding the protection on the LLC. Yeah, if you just do a single member LLC, you do not have charging or protection. And a lot of times I have you do a single member LLC because it will work for you. And I also explain about charging order. So there will be a time where you need charging order protection, but many times you don't. You just need to retitle the property, meaning retitle the money. So it's not in your name, it's in the LLC's name. That's enough for most people, okay? That helps you, but
Yeah.
And if you have a PMA, and you're just the person that has the signatory authority, it's the PMA, right?
okay, a PMA is an innocent party. That's not going to give you charging order protection, but it's just another way of doing it. Another way of doing it is one of my clients did one where he got a group together and they formed an LLC where there were 5 members. And when they opened the bank account, they only wanted the KYC for the signer. They didn't even ask for all the other people's IDs.
Oh, that's good.
Yeah, these are things y'all can do if you don't like KYC. Put a group together and set up, you know, these type of companies, and you can dedicate them to whatever uses you want. Maybe it's a nominee company. I've done those before. So everybody in the group gets his own company, but everybody's in everybody's company, right? It's not going to hurt anybody.
Mhm.
So you're saying that a PMA does not give you charging order protection?
Correct. A PMA does not because it's a single party, single member LLC.
Okay.
But it is an innocent party, right? It's not you. The difference is if it's me and I'm being sued, then I have no protection with a single member LLC. But if the single member LLC is owned by a group of people that go by a common name, the PMA, you
Mhm.
got a problem then. It
Right.
still may cause the attorney to investigate. I've not seen that yet, but that's why you can easily amend the articles.
And also you're saying that you started out as a single member LLC, but if that client later needs charging order protection, then you can add in another member.
In the articles, I've done that in the middle of litigation.
Right, it's easy. It's just, you amend it
Yep.
on the site,
Yep.
on the state site.
Yeah. I've done that.
John?
Yeah, go ahead.
Sorry, is it possible, like, I'm just thinking about, like, my dad has been talking about establishing a will or doing a will. There's two siblings. I mean, what about the idea of putting all of the title, or holding all the property and putting it in an LLC and having the whole family, right, listed or own or be in the organizers of the LLC?
Yeah, you can do that. What you're doing is removing the property from someone's estate. and you're
Right.
placing it in the collective group of people. It's a completely different ownership. That is
Right.
the way to do it. Just understand that here's what I recommend is when you have an entity that's you're using like this, don't combine unlike risk. So don't have the LLC own the house and the car.
Okay.
And sometimes it's not even necessary. Like, for example, if your dad has gold coins in his sock drawer, he just might leave you a note, right? Say, hey, daughter,
Right. Don't worry about,
when I'm dead, go check out the sock drawer, I mean,
Yeah.
it's that simple.
Well, what about things like if there was a pension or anything like that? How does that work?
Pension funds can be in the will. I mean, the will just lists property, right? And what you want done with it. The pension funds usually have a provision where they can be inherited. And just keep in mind, once they're inherited, you lose the exemption aspect of it for debt collection. So just keep that.
Okay.
But yeah, the pension funds are trust organizations. I don't know if they're in your estate or not. I'm not sure how those trusts operate, but it doesn't
Okay.
matter because they're pretty well, I mean, they're designed to survive, pretty much.
Right.
Yeah. But
Okay.
it's a good idea, by the way, to answer your question. It's a good idea to have a will. You should have a will. I mean, just like the richest people on earth, I always use Warren Buffett as an example. The lore is that Warren Buffett owns a pickup truck.
Right.
So
Right.
his estate's already handled, but he has a will. And see, think about it like this. Let's say you have a will and you think, I've covered everything. And I put the pickup truck in the will, but I didn't put my $10 million in hotel over here, right? I got it over here. But let's say that a week before you died, maybe you inherited some money, or maybe there was some money out there that you were entitled to, or some property or something that happened, and then you just didn't do anything about it, and your will can handle that.
Right.
So it's a good idea to have a will. It's also a good idea to have a will because it's going to make you pay attention to property rights, and you should consult with an attorney on that. There's nothing wrong with that.
Okay.
I just think if you're going to use an attorney, don't just go there and say, I don't know anything, do it for me. At least be involved in, understanding what the attorney's doing and ask him to do a specific thing for you.
Okay.
I can open up the discussion group. I mean, I just would want people to stay focused, but I don't want to reinvent. You guys have already discussion groups. I don't want to
We
duplicate.
got one. People just didn't know where it was.
Yeah. So
And it's multi-pronged. So
all right.
I don't know.
Right.
All
So
right.
all right, what I'll do is I'll give you guys the link to the unlisted video of this call. I'm not going to put it on YouTube for strangers. That doesn't preclude you from sending it to your friends. But anyways, I guess maybe it's partly a message to the tax protesters. Stop doing that. Behave. All right, y'all have a nice weekend.
All right,
Thank
you
you,
too.
John.
Great call, John.
All right, thanks.
Thanks so much.
Thanks, everyone.